All right. We are live, folks. We are live. So today we're going to talk about swing trading, if you will. I know a couple of you guys wanted to know a little bit more about it. Um, you know, kind of the psychology behind it. I know in a volatile market that we're in right now, it can be really, really frustrating to build a swing and then um, moves start to come back and you're looking at either round trips or maybe even worse, it's round tripping and then it's continued to going against you. So um, one thing that has to be understood when it comes to swings, and I think where people get swings and intraday trading, and even scalps, when you're going into a swing position, the mentality is that I plan on being in this for a while, and we're talking, 2, 3, 4, 5, 6 days, maybe even weeks. Uh, we have one trader in here that's been in a trade almost an entire year. That's a massive swing. So you have to go in with the understanding that I'm going to be in this for a while. That being said, when you have a swing, it's okay to start building it. That's why it's important to run a lower leverage. A higher leverage, I've even ran higher leverages myself, so I'm not innocent in that sense. But the appropriate way to handle that from a risk management perspective is you want to run a lower leverage. And what I mean by lower leverage is you don't want to have a high enough leverage to where maybe 10 or 20 pips can liquidate you or push you out of a move. You want to have a substantial gap in between from when you're building your entry points, to where a stop loss could be. And when you're focusing on your stop losses, you want to be extreme with those, because if you have a tight stop loss and it just taps onto your stop loss, let me give you an example. I'll come over to here to a weekly. All right, let's say you're building this swing here and you're like, all right, cool. I have an entry of 21.27, but I want to have a stop loss of 21.68. See, that's a short gap, roughly 30 pips, a little bit less than 30 pips. But notice that if we came up to 21.68, let's say it stopped you out and then it continued to trace back down, then what we would have is a double top. And I think that would be frustrating for anyone, because once they get up to here and it pushes them out, now they're beginning to start chasing. You're no longer swinging. You're now focusing on an intraday type of trade. Intraday, the difference between intraday and swinging is by the end of that day, you're going to be out of that trade. And that's difficult for some folks if they, one, have to go to sleep, have to go to work, they have to go and do something else. This is why having a larger stop loss is important and running a lower leverage is important. I'll use myself as an example in regards to the challenge. I started my swing, if you will. I started to build my swing around 1906. My understanding was right over here in this area. I had a shark pattern that had printed. No, excuse me, a crab pattern that had printed, and it just made sense over here because this is a nice resistance area on a higher time frame from weekly. So I started to build a swing here. We had a retracement that came back down, and then obviously we started to push back up here. I held. I held because my stop loss was all the way around 21, 2015. Yeah, I think it was 2015, 2015, which is right over here. So essentially that got pushed out, but running on a 9x lev, only using roughly around, I think it was like $95 of a port, I lost like $16. Like, I'm not losing sleep over that. Now, mind you, had I been running my normal high leverage, like 74 or anything that's above 50, I would have got pushed out over here, if liquidated. So it would have turned in from a $16 loss to like a $95 loss. So what I'm trying to drive home is that when you're approaching your swings and you're approaching them all together, have the understanding that you want to start building from a lower leverage. Can you change your leverage down the road? 110%. Because at that point you'll have that confidence. Your TA will provide the confluence, and ultimately you have some confirmation areas that add to that. So when I'm building the swing entry, it's not just okay, this is where price I think is going to hit the top, and let me just go ahead and grab it. Like you already had to have this predefined in your mind. A lot of us in in this VC right now, we've been mentioning if it breaks out of 1906 areas, the areas that we're looking at are going to be look left. Where was the last resistance coming from? 2100s. Some of us were calling for 2170. Some of us were calling for like 2150. Me, I went off of where the strongest sell candle came from. That was my logic behind that, and it pushed right into it and pushed a little bit higher than that. But over the course of I don't know what was it like. See, it's tapped it a couple times. So when I'm seeing this, and the reason I'm explaining this is because what's going to be the moment that I start to change my leverage? It's when I enter into a swing and then my follow confirmation candles are starting to show me number one, imbalance and or strong sell candles, or if it's the opposite, strong buy candles if I'm looking along. In this case, we're shorting. So building the short from there, I'm looking for the confirmations on these lower time frames. I won't go lower than this from a swing trade perspective. Like this is the lowest I'm going to go, 4 hour. Focusing on the higher time frames will give you stronger data, and it'll give you that confidence that you need, saying, okay, I feel comfortable with this position. If I come down here to I don't know, like 15-minute, right? Lots of imbalance. You see this large candle here, you're like, oh man, this thing's going to keep going. And then you have strong buy sell candles, and then it just keeps dumping. Imagine someone that saw this candle here, okay, saw a sell candle, but it didn't break underneath, and now they entered into a long right here. They're pushed out. So that's why it's important. First rule, you have to approach any swing on a higher time frame. You can use a daily, you can use a weekly, you can use unique time frames like 2 days, 3 days, 5 days, what have you. But let's just go. Let me go back to weekly. That's where I'm building majority of this. Let me take this off. The timing of your swing is the next part. And I think this is where it's most beneficial for a lot of folks. When it comes to a swing, you can look at a chart. Okay, excuse me. Right? No drawings, nothing on it, and say, okay, I want to short. That's a position I want to take. What's going to be a good opportunity for me to look into shorting? Maybe you do have an entry that's set up over here and waiting for a double top. There's nothing wrong with that. The purpose behind that is that your swing should already be predefined well in advance. If you're in it to make profit, which I believe a lot of us are, but you have a daily goal or a weekly goal and you're trying to swing, I think that can mess you up. Because remember, I said in the very beginning, a swing you can be in for days. Let's use the opposite. We were talking about 1541 as far as a long on a cipher that we have. Actually, 1537 is the entry. That's a swing. They've been sitting in this for 1, 2, 3, 4 weeks. I'm hoping that person took profit here in these areas. That's the logical thing to do, is start taking profit where you start to see that there's going to be resistance areas. Right? But 4 weeks, this individual has been in that same position. The opposite is going to be true when it comes to your short. And then this is where we're going to start factoring other indicators, things of that nature, to help you with time. I think the fib time zone tutorial that we went over really helps with swings. Being a pattern trader, as far as harmonics can take a longer time, but you got to remember, harmonics, whether it's bullish or bearish, they're reversal patterns. They are not continuation patterns, they are reversal patterns. So if I know that I'm going to go into a harmonic setup, I already tell myself this is going to be a longer play. It's not going to drop where I wanted to drop immediately. This is going to take some time. If you're not that individual and you're like, I just don't have that in me, I don't have that type of patience, that's all right. You go down a step, you go down to intraday trading. This is how you start to condition yourself. You can get out of a trade and still be in it for, 8, 12 hours, 16 at the most, but you're getting out of it at that point. The issue when it comes to swings in a tight stop loss is that we become married to that position. Oh, this has got to work. This has got to work. It's got to move. It's got to move. It's got to move. No, have a larger stop loss and keep building. I'll use myself as an example again. Let's go back to Control K. Put those back on. Right? I built in several different areas. I've built here, and I've also built right around here, 2045. Why did I build around 2045? Well, if I look left, right, because this is a strong sell candle, all of this is in balance. So it made logical sense to enter into that. What did the market do? It took it for liquidity. So there was no logical sense of me holding on to that position at 2045 when I know I can get a better entry. Will price retrace back down to 2045? Yeah. Will it be painful during that time span because you're sitting in the red for a while? Yeah. And that's me. See, that's my psychology. I don't want to sit in the red for 3-4 weeks, then finally get out of the red only to make a smaller amount of profit. Let's say it comes down to here. I'm prepared to burn specific positions and look for a higher entry. I burned 1906, 16%, $16 loss. I burned 2045. It was like an 18% loss, which was like $15.16. So total loss, I'm like at $30 loss. I entered over here at 21.27. I'm up $72. I've already recovered my losses and then surplus. If I was just focused on my losses and that's all I wanted to focus on, then more than likely I probably would have said, you know what, F it. I'm gonna take a break. I'm not doing this. Come back the next day and now I'm looking to chase, or I'm just impatient because now I'm revenge trading. I think that's really key for a lot of folks when they're looking for those swings. It's all right to burn a position if it doesn't go in the direction that you're looking for. Going back to what I was saying before, let's say price pushes all the way back up here to 21.27. Yeah, I have orders ready over here. And then obviously I have a stop loss that's set over here at 2209. But for this pattern, mathematically, this is the other part. It can run all the way up to right around here. Oops, that's too high. Right there. 2306. Price can run all the way up to there. And it would still be the same pattern. It would still be a shark pattern. The other part for that, if you're following my strategy in the sense of how I trade, when it comes to harmonics, we have 5 points. When the harmonic is being built, there's only 1 point that can continue to move until it's invalidated, and that's wave D. So if it continues to move up, it stops me out. All right, I'm looking for 2306. Because I believe in that pattern. I believe in the sentiment that we have a pullback that's coming. That's the next part I want to focus on. Yes, trend is your friend, 110%. But who's longing up here right now? Not many folks are. I think a lot of folks are going to be nervous to long over here from a swing perspective. It just makes no sense that you would have scalps. Maybe even intraday. Let's come down here to a 4-hour real quick. Right? Focusing on that same pattern that we were talking about, the shark, I had mentioned in my corner that I'm looking for 2067 as a confirmation area. And Lord, look what it did today. It came and tapped right on it and kept going. So my pattern isn't confirmed yet. I'm prepared for it to move back up, and I'm all right with that. Well, Saint, why don't you just take profit here and then re-enter back up here? Because what if it doesn't go back up? That's the issue. I don't want to put myself in a position where now I'm chasing that position. So I think people like to use the terminology diamond hands, right? When it comes to swinging, you need to have diamond hands. If you fold in, that's fine. I'm not going to say you have paper hands, but you're not swinging your intraday trading, just day-to-day trading. But don't mix the two. I think that's where a lot of folks start to get things conflicted. Now they start entering into hedges because they don't believe in a short, and they're like, well, price is probably going to run back up. Let me just enter this hedge, and there's a small gap in between. Yes, you'll make some money, but I think the stress that comes with that takes the joy out of going, I'm actually making money. Let me know if that makes sense so far. I'll take your guys' silence for a yes. Now, one thing that you can utilize on a lower time frame are order blocks, because you have an area that's mapped out. Let's go back to a weekly, and I'm going to work my way down. Right where you have these long wicks, wicks will represent liquidity. So that tells me that there's a block here in these areas. You want to just map it out like this, right? From the wick to the body. Price action came right into it. But maybe I want something that's a little bit more sniper, if you will. I want to get that laser shot. That's when you start coming down to lower time frames. Whoops. Right? Okay, I can see there's imbalance beginning here because we've entered into this order block area. I can see that this has some type of dominance here. So I'm telling myself, I mean, just use trend lines. You don't even have to reinvent the wheel here. All I did is I went from wick to body, wick to body. Well, why didn't you use this wick? Because this entire candle was a sell candle. I want to use the strongest point of a buy candle and lay it on the body of my first sell candle. So I'm telling myself, all right, if I break out of this area here, it's fine. I have all this to play with. But what if I start rejecting here like it is right now? This could be a small ad, right? Let's go back down to even lower time frames because we talked about just going down lower and lower to find those ninja spots, if you will. 15-minute. Let me put this back on. Here it is. 2102. Right? Are you guys seeing how I'm finding this and what I'm looking at? This setup right here, this Navarro is not a swing. It complements the higher time frame play. That's the only reason why I'm looking at this, because there's 5 different swing points. That's an extreme. This is an extreme. This is an extreme, and this is an extreme. This is our most recent extreme. Let me come here to 4 hour because that's going to confuse me with this line. The second part, and I put the cheat sheet inside of the classes for candles, understanding candles and how to identify them. On a 15-minute, I'll be very frank, it's difficult to base your entire setup on a lower time frame just based on candles. But let's remember what candles are going to represent. It's going to represent a battle between one side and the other for the time frame that you're looking at. So over the course of 15 minutes, uh, bulls wanted to push the price up, and bears said, this is where you get a hangman. It's on the weaker side in the sense of type of plays, meaning a hangman can be 41% of the time offer a reversal. Okay, I see the hangman printed. What's my next follow-up candle? Is my next follow-up candle going to move up? Then it invalidates that theory, meaning we're just going to move higher into this order block. So I need to make sure that my swings are ready to go. If I entered here, I ran a tight stop loss for that specific reason. For that specific reason. Because it's going to move back into this range in this area here, and I can get a better entry. But it didn't give me a follow-up buy candle. It gave me a strong sell candle. Now here's the difference. These look identical, hangman, but this is a hammer. Right? Your hangman will be created from an upthrust, from an uptrend, from an uptrend. Your hammer will be created from a downtrend. It's only one candle, it's still a downtrend. They both offer different percentages of reversal. So to have a hammer and having continuation is roughly like 51%. So it's like a 50-50 type of scenario, meaning it could just, you have a hammer here and then it tries to move up. During this 15-minute session, that's exactly what we saw. But price didn't make a new high. Came right up here to this 2102. So what I'm doing is I'm showing you and I'm building that that confidence, letting you know these are the things to look for when I'm on a higher time frame, saying, should I be holding on to this, or should I be prepared to either cut some of this because now I'm intradaying, and then get prepared to lock in a new limit order here in this area, maybe even a little bit higher. Candles are going to be essential, in my opinion, when it comes to establishing and confirming if your position is going to be on the right side of the track. A very basic, you have support and resistance areas. Let's go back to a weekly. Let me take this Navarro off because it's going to get in the way. Support and resistance areas. Saying, how do I find support and resistance here? What's going to be a good resistance? Well, like I said, we can look at a chart, have nothing on here. Oops, I did not mean to do that. I wanted to do this. Right? You guys can see that this can play and act as resistance. Yes? And if you don't, that's fine. Don't be shy. Say like, how is that resistance? I'll dive into that. But if you can see that this is resistance, this is something where you're going to be measuring from. And this is where tools start to come into play. Fib zone is one of the tools that I like to use. Swing low, swing high. Let's minimize that. Okay. Let's say you never took entry here. Maybe your next swing comes from in February. The next 3 months. Remember, we talked about in the very, very beginning, a swing setup can be for a long time. So, for example, if you entered here, and let's say it just chops and does all this for the next 3 to 4 months, right? And then we have a swing long entry from here. That's one. The other side would be, what if it just chops here and just plays off of this order block here from this area, then moves up? Right, the next major area that I'm looking at to moving up right here. I'm using the fib and I'm measuring from this same swing points, this swing low to this swing high. Same thing with a Fibonacci retracement. This is my overextension. These pop-ups are annoying. 0.25. I'll give you the second part of that, right? Because all this matters when it comes to pattern plays. Whoops. That's this final destination. So maybe you don't want to take it here. You want to take it here. Right? You want to be able to look at a chart in advance and say, okay, that's probably going to be an area where I'm just going to set limit orders and just walk away. I'm just going to set limit orders and then walk away. So for me, right now, where we're currently at, I believe we have a pullback that's just, it's needed in order for us to move higher. I think it was not this one, or was it? I don't know why this chart takes so long to load. There it is. Again, just going back to candles, because I want to build a swing. I want to see what has happened every time we have large thrusts like this. 1 candle, 2 candle, 3 candle, meh, that's okay. 4 candles. You can say 5 if you want. After that, dump, 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 dump. Buy candle, buy candle, buy candle, buy candle. Dump, 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 dump. Buy candle, buy candle, buy candle, buy candle. What do you guys think happens next? So the logic behind it, the psychology behind it is saying, I want to position myself where I can start building that swing. 1906, premature, right? 1906, because I wanted 1923 as a 618 to act as resistance. It didn't. It just took liquidity there. Again, next move was 2045. This made sense to me just because right here, we didn't cross over that high. Yes, we did here, but it was immediately rejected the very next week. So 2045 was where I base it off of. No one's going to be perfect, guys. Although we want to be perfect on it, sometimes we're going to make those mistakes. So getting rid of that position, not hanging on to that, not hanging on to a loss, knowing how to lose and move forward, and then continue to build from there. You can use other indicators like DMI. I strongly recommend you guys just checking out the DMI tutorial that I've given. I've gone over it several different times, but when it comes to building a swing and looking on a higher time frame, not a lower time frame, but a higher daily, weekly, even monthly if need be, you want to be able to see, okay, what does my RSI look like? RSI is not going to necessarily give me the trend strength. It's going to give me the candle strength. So am I in an overbought situation? Okay, check. That makes sense to start building a short. I'm looking at my DMI. Is there any loss in momentum and loss in strength? Is my ADX curving down? Is my DM positive starting to point its nose down? When it comes to the DMI specifically, and I'm trying to build that swing, this is why I defer to a 4-hour. It just gives me a little bit, for me personally, it gives me a little bit more confidence in the move, saying, okay, I feel comfortable about this. And anything can happen. I mean, look, DMI over here in this area was starting to tuck under. And I think I'd mentioned inside of Jedi that If it decides to move up, we're going to have like a V shape, if you will. Now, this isn't a V shape, this is a scallop, right? Ascending scallop. Almost looks like a J. Just knowing yourself as a trader, as a human being, if you have impulsive emotions, no one here is judging you. You just got to know yourself. I'm not wired that way. Like if something starts to go against me, I get antsy. I lose sleep. I start getting the itchies, if that makes any sense. Then just identify with that. Maybe swing trading just isn't your thing, and you just have to mold yourself into that. That's why I mentioned intraday is going to be a better setup. Now, while you have the swing, you can start opening up hedges, and those hedges turn into scalps. So an example of that would be, I think I mentioned this earlier before, but like if we come over here to 1923, which is it's a pocket, it's a golden pocket area, and we bounce off of this area, 110% opening a hedge. And then I'll play off of that to see what it's going to do. This may turn into your swing where I'd have to close my short. I'm not going to get the full extension that I'm looking for, but then I'm going to be able to enter into here into a swing and then just keep riding it up. This can take, who knows, guys? It can take a week, it can take 2 weeks, it can take 3 weeks just to get into this area. But a 10% drop, I think that's substantial enough for a swing. Risk management, I had mentioned in the very beginning. If you're scalping and you want to run like 125x, 100x, 74x, more power to you. Nothing wrong with that. Remember, your scalp, you're going to be in that thing for a couple minutes, maybe a couple hours, like 2 to 3 hours max. And then you're out. If you tell yourself, I'm going into a scalp because you're on a 15-minute, you're on a 30-minute, you're on a 45-minute, you're at a max 1 hour time frame, and that's what you're utilizing, that's the time frame that you're using, you're scalping. You're not swinging, you're scalping. So you have to have a predefined area of where you're exiting and just get out. But what if it goes in the opposite direction for me? What if it continues to go, not the opposite direction? What if it continues to go in the direction I was in? I started to uh, long, and it was intended to be a long, and then I got out. That's all right. That's part of the strategy. And I think where sometimes folks get mixed up is that they get married to a position and then they don't know where they stand with that position. They're in a long and they've been holding on to it for maybe like 16 hours plus. It's now the next day's session, maybe not the next 24-hour time swing, but based on trading sessions, it's the next day's session, and they're still holding on to that. We all know when the next day's session happens, when it opens, it's going to have movement. It has to have movement because it's the next session. Now you're holding on to it, expecting it to move in your direction. That's where you messed up. Your swing, you can, you're engaged to it, if that makes any sense, because you plan on holding it for some time. Intraday, hey, this is just a fling. Scalping, this is speed dating. In and out, in and out, in and out. Does that make sense? I'm just trying to use metaphors to where it can click for you guys in that sense. Like, if I'm going in for a swing, I'm prepared to be with this thing for a minute. Are there any questions of anything I can answer so far? I wanted to try to get as much as I could to you guys in 45 minutes and then essentially open it up over the next 15 minutes or so just to answer questions, go back over anything. Maybe you guys hopped in a little bit late, but just run back over that stuff. The measure move, yes. So go back to a weekly. Wrong turn. Control K. Oh, you're there. Okay. So my measured move for any symmetrical, right? It's measured from your swing high or from your high to your low that created it. This is the low that created it, right? Because we had an up thrust, boom, 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 boom. We tapped here, creating this line of support, and you won't know that support until we come back to this area. So when we came back to this area, it confirmed it. The opposite is true. We came up to here, resistance, boom, hit the same thing again, boom, hit the same thing again. So this tells me that this is a strong trend line, if you will, whether it acts continues to be a point of resistance down the road or if it acts as support down the road. And the same thing for here, right? I'm measuring from where it broke out from, came and tapped into here, tapped here. So this is my first swing low and my high. Take that and measure it from where your breakout is. And a symmetrical is not a reversal, it is a continuation. Yes, going back to it, a symmetrical can go both ways. And that's like textbook. But what some folks don't share with you is how was the symmetrical created? Was it created from a downtrend or was it created from an uptrend? It was created from an uptrend. And the measured move can be the exact same to the downside. You just whoops, 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 whoops. You would just move that, and that would put you like 3-digit ETH. I don't see that. And clearly PA is showing us not that. So that's the measured move. There has to be a pullback, and that's what I've been stressing. So this next week candle, I would anticipate imbalance, imbalance. Remember, we're in a swing short right now. So this imbalance can be 1 week, 2 week, 3 week, 4 week, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. It can be up to 14 weeks. If it wants to dump all the way down, like that part we don't know. Those are things that we have to just look at. What caused and fueled this move up are twofold. Uh, Technical analysis perspective, it's a symmetrical. It has a breakout. In my opinion, I felt like it was a little bit early. I wanted the breakout to be somewhere around December, around this time frame. Um, but not to get too off subject, that's how you measured it. So that's where this yellow line comes from. So this would be the measured move for the symmetrical. 20, what does it say? 2698. What's the next area that's going to be of interest? Oh, 2847. This is Phoenix. Phoenix doesn't have that much data on there. Bybit does. '27s, 28. And all this right here is just considering how it just straight plummeted down like that. That's straight liquidity, right? So what I'm getting at is like if we come up to 2800, chances are we're probably going to come up to here. 3,500. Ryan, does that answer your question? Or did that clear it up? How we came to that? Yeah, buddy. It's I'm streaming right now on the YouTube. So what I'll do is once this is over, I'll just dump the link inside one of the classes. It's recording in 4K, so it takes a couple hours for it to finish, but it'll be there. Okay, so this is where I'd want to see the pullback. I want to see this trend line tested. I think this is probably going to take, in my opinion, I think it would probably take until December, right? I was projecting that we have a breakout around December. What I was predicting was we tap here, we come back down. You know, worst case scenario, which is right in the middle of the road here for your symmetrical, puts us around like 1650s up to like 1680. Just depends on where it was at the time. But we obviously didn't get that. So the other side would be put me in December right there. What is this? 1876. And do I have that for a TP? No, I don't have 1876, but I do have 1779. So maybe even a wick would come down here. But what I measured is this fib, which is X to A, to use this internal structure, if you will. And then I used a higher fib for the overall structure, external structure. External structure is going to be a lot more dominant, if you will, than an internal. So that's why I was speculating that we come into tap into these 1600s at least one more time. But if this internal structure becomes the leading structure, with it's going to push us into a break of structure, because once we break out of this area here, then we have number one, we have a change of character, but we also have a break of structure as well too. So these fibs, 1820, kind of line up with where this area is at. I would give it right over here, maybe worst case scenario. If it continues to retrace down even further, then like let's say we lose wave B. Yeah, that might be a stopping destination, because if you look at where 1619 is at, it would tap onto this. This trend can turn into liquidity. right? Just like it did it here because that was resistance. That was resistance. I even shorted that there and then pushed right up. The opposite can happen down here. I would more predict that probably in the month of January, to be honest with you. But this whole ETF news and the fundamentals is what's really leading a lot of this thrust. It's not necessarily the technical aspect of it. It's more of the ETF. Prior to this ETF news hitting the market, if you looked at a DMI at the time, strength was already building. Momentum was already changing. You can witness it on a 2-day. You can see it on a 5-day. So the changes were already occurring, but then it just needed fuel, and then that's where fundamentals came into play. Technicals will outlast fundamentals. I'm a technical trader, but fundamentals, the news can change. We can go to war. Anything can happen in that sense. But from a technical perspective, right, those are going to outlast. So from technical, a pullback is required in order for us to move higher. If we want to just keep going and keep skyrocketing up, like it's an extreme. But look, every time we just have straight parabolic moves, 1, 2, 3, 4, boom, 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 5, retrace. This is a pullback from this move. This is a pullback. That's what that should look like. It gave you a healthy enough liquidity to take here in this area, and boom, 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 boom. Now see, this was 1, 2, 3, 4, 5. Maybe 6, depending on how you're looking at it. But anytime we exceed that 5 candles, 5 buy candles, just look how strong the thrust down are. Every single time. So what I'm saying is that let's say we get another large leg up, I'm game for it, but I know the thrust down is going to be much, much more severe. Once we exceed that 4 candle limit with no pullback, because look, guys, we've had 0 pullback. 0 pullback. Keep going. It's going to dump even harder. Then that idea of what I was saying before, as far as the symmetrical breaking down and coming down to like 1600s, then that would come to fruition. And then I'd be sitting in that swing for a hot minute, or like 2 months. And what did we say? Like 12 weeks? Yeah, so a little bit over 2 months.
I'm holding a chunk of the long from 1900. I'm wondering at what point to go ahead and close it out completely. What point can we say we ain't going back to 2000? When can I cancel my insurance?
uh, that was a good one. So if you're at 1900 and this trend line right here would represent, you may end up round tripping. I would have, if I'm long from 1900, I would have stripped a good chunk of it here in this area as I entered into my short. If I see that price action, because remember, I'm building the short, so I'm looking for a confirmation. So if I get a confirmation of a close, let's say this weekly decides to close just under 2067, I would kill my short. I kill my long. The next week's going to open. It may push back up and tap into here. That's where you have to be disciplined enough to say, oh shoot, let me not chase this. You got to kind of pick your poison when it comes to that. Like I said, if it closes underneath 2067, I'm looking to close it. Let's say we hold this area here. I'm waiting for the next week candle, whatever that high is. At that point, I'm going to close it. So let's say we open up next week, Sunday at 7 p.m. We Eastern Standard Time. We open up, and let's say it starts to thrust up, right, or it has like a little bit of a push down to 2067, and then pushes back up again, right in these areas. Probably looking to close it here in this area, or at least take max profit. Take max profit like 75, 85%, and then see what it wants to do again. If it wants to come down to 2067 again, then at that point you can tell yourself, okay, this is going to be a strong area of support. One, it didn't close underneath it. Two, the next following confirmation candle bounced off of it, moved up, came back to it, and bounced off of it again, and then decided to move back up or hold its ground. At that point, I would be looking at to re-entering my long here in this area. This would be my intraday setup. This would not be my swing. I'm still on the 1, 2, 3, 4 candles. I promise you, 2067 it's not a pullback. A healthy pullback will be somewhere in testing this area. And that's the next part, right? Most trend lines that we break out from, 95% chance it's going to be retested. 95% it's going to be retested. May not be immediate. It could take 4 weeks before it gets tested. But sometimes we get into that position where we start kicking ourselves and going, shit, I should have closed it up here. Why didn't I close it up here? Because we're married to the position. Greed is up there. We're human beings. That's the emotional aspect of it. But that's what I was saying before earlier is just have those emotions in check, saying, okay, I can close this. I don't need this. I made my profit. Now I'm just looking for a better entry. Take that profit and start building your short. You want to be a little risky, enter into a small hedge here, which is going to turn into a scalp. So be it. Or maybe intraday, but definitely not a swing. When we come back down here and we test this area here, whether it be, 1899 or somewhere in this area from like 1907, which would be funny, the area that I was shorting, 1916, it turns that into support, then that would be your next swing because it's not going to come any lower. It's a full-fledged breakout. So you have a retracement. It may fart around here and then moves up. That's kind of where I made this, right? Like we come down here, we test here. If we get rejected here again, let's say we can't close over 2067, I feel very confident we're going to come and test wave B. Extremely confident we'll test wave B. And then that should propel us forward and higher. I have too many fib zones open right now. That might be confusing. Hold on. Here you are. Let me get rid of you. Yeah. Right, because this fib zone's measured from the internal structure. So like this area right here, which is January, the end of the month January, would be the next move. This would make sense to me, right? Boom, test, more liquidity here, come down here, fill in this imbalance, right? Like all this is imbalance. In a perfect world, we fill all this imbalance, but that's just not the way the world works. If we're going to enter into a bull market in 2024, we just fill in some of this imbalance right here, and then we propel. The fib zones have been on point thus so far. We mentioned on, I think it was like on the 26th, 27th of October. It's in one of our posts. It's specific to yours, Ryan. That on November 4th is when we have our move. And literally at 11:59 p.m. on November 4th is right when it started to make its move. So by the 5th, we had a move up, a strong move up. Yeah, right here. Look, it's right here. Look. So leading into this day, right, we moved down a little bit and then choom. So the zones are on point, is what I'm getting at. This area right over here, 1 through 2, it's boring. It's boring. That's why I said this earlier that we should maybe chop like this. Tap here. If we tap here, we come down to here. We bounce off of this, I'm longing the shit out of that. We bust through that, I'll long when we get back down to here. Right? Build the swings. Build the swing. So I would enter here because I would enter into a long swing, maybe like 10x. We move up. We get back out of here. I increase my leverage. I'll increase my leverage. That's what I did here, right? I entered in at 21.27. I think it was like around like 9x or so. I saw the rejection that we were looking for. I was like, a little bit of a risk, but let me increase my leverage. So I increased to 50. Yeah, super simple, right? If you find yourself round tripping, it just you got to tell yourself that you're married to that position. That's it. If you're in profit, just take the profit. It's I think where a lot of folks get messed up, they're like, I don't want to close this and it keeps going and then I miss out. I leave all that money on the table. Well, you could re-enter. Yeah, but if I re-enter, then then it's gonna be that same. Oh, I gotta watch this thing and it's not going right. You can't have both. It's not Burger King. It's not your way. You got to be in it to make that profit, take it, and then go and reassess. That's going to be your intraday. That's going to be your intraday. The fact that you've been holding it from 1900, it's now a swing. But once it starts to round trip all the way back down to here, that's going to be frustrating. So what I'm getting is I would have stripped it. I stripped it naked as much as possible so I can squeeze as much profit out of it. Anything else I can answer for you guys? Or anything you guys want me to go back over? I'm going to look at a 15-minute real quick because I think I had a Navarro that was supposed to perform. Yeah, it's on the stomach candle. Okay, then you have a regular buy candle, uh, and then we're getting rejected again at 2102. Yep. So what I'm showing you right now, this is just how I'm maintaining my position, saying, okay, well, do I need to cut my short? I'm looking at it this 15-minute to see what kind of interaction I get. Like once I start breaking out of this 2105, I'll probably strip my short, and just wait for it to come back over here. I won't kill my short. I'll just strip it. If any of you guys are hopping in late, it is recorded. Um, it's recorded correctly. So I ran into issues where it hasn't been recording correctly, but it is recorded. You'll be able to thumb back through this um, once I post it inside the group. At this point, I'm just opening up the floor to answer any questions for you guys. Yeah, I did discuss risk management on a swing, using lower leverage and having a longer stop loss, or at least a wider stop loss. Being prepared to cut a position and re-enter at a stronger point. You don't need to use higher leverage. You don't need to use a full portion of your port. When you're swinging, you're building a little bit here and there, a little bit here and there. It takes a little bit more time. What you can do is once you have it built from a risk management perspective, saying, okay, this is enough for me to risk, then you can look into increasing your leverage. Position size is based on where you feel most comfortable. You have people in here that have access to 40,000 who may use a $5,000 position. Some folks may not want to use that. So you got to look at your portfolio and go, okay, I can make 10% moves, 15% moves, 30% moves, and then just keep building from there. If you end up building and now you're at basically full port, you didn't cut when you needed to cut. Yeah, in a volatile market, when you're swinging, you're not using and you're looking for swing entries, we're not doing 74x. We're doing 9x or even lower than that. Once you have your position built up, you can increase your leverage.
Gives a bit more confidence the short is gonna stick, so I'll keep my insurance policy open for 3 more days. I guess I'd rather have.
Yeah, no, I totally get it. Like shit, I wish I had a long open and it starts moving in the direction that I want it to move in. And you're like, now I find myself chasing. I totally get that. As long as you're a hedge, right? It has a wide enough gap, right? If you entered into a short around 21.27 and then you have your long at 1900, that's a beautiful gap. That's perfectly fine. That is strong enough amount of pips in between where it gives you wiggle room. But if you're hedging and you have like a $20 differential or maybe a $40 differential and it's volatile, it's not chopping, it's volatile. I think that's when it becomes more of a greed factor and lack of confidence. You're like, well, the market's just doing what it's doing, and I don't know which direction it's going to go in. So F it. Let me just throw in here, and then we had support here, and then let's hope for the best. 9 times out of 10, both of those positions either get taken or you lose out on profit not knowing which one to close. And you're just sitting there like, I don't know which one to close. If I close this one and it goes in my direction, now I'm chasing. Yes, $200 at 9x and $200 at 74x will have two completely different position sizes and also have two completely different liquidation sizes. If you're swinging, it's more likely that you had an upthrust, so there's volatility in the market. If there's volatility in the market and I'm running a high leverage, there's a strong possibility you're going to either be, number one, stopped out and or liquidated if you don't have a stop loss. So as you're building that position, right, you can always add back. Let's say I'm at 21.27. Let's say price never even gets back to 21.27. So what did I discuss before earlier is I'm looking for a confirmation, 2067. If I can get a strong close underneath 2067, then I can add back into that with confidence because my average is already at 21.27. Whatever I'm adding to that, it's not going to erode it because I know it's not going to go up and beyond that. See, I think the issue when it comes to position size, where a lot of you guys are focusing on it, your position size is based on your own comfort, how much you are willing to lose and risk. Everyone has different risk tolerance, so there's no mathematical saying you only use this. If you can't lose that, then you have to use a certain percentage of that. So let's say you have $200 and you only have $200 to spend, then you should be using 5 to 10% of that at most. Not using a full $200 port. If you have access to $5,000, do you want to use 5 to 10% of that? Okay, well, what if it starts running in the red? Do you have the stomach to sit in the red or burn that? Well, I don't want to lose 400 bucks, 300 bucks. Okay, then go smaller and just keep building. Does that make sense? Sure. All right. I know you guys want to build something that's juicy where you can sit in it for a while, but if you have confirmation areas and you have certain areas that it has to tap into, you know where you can add back in. If you go in on a heavy position up front up here, yeah, it may work in your direction, but what if it doesn't? Right? So that's why you have a wider stop loss, a much wider stop loss. If you use all of your port or a good chunk of your port on a swing up here, then you have nothing else left to build on it.
We got a Gravestone Doji on a 15-minute.
This is a good example in regards to like confirmations and just using the lower time frames to see if we're in the pullback phase. Right? We wanted to see this area get rejected. Look at this selling pressure. That's your selling pressure. That's a big giant clue saying, okay, I feel good about this. I feel good that I entered over here. Let me add back in these areas. Do something small. It doesn't have to be huge. It doesn't have to be full port. It just do something small. I think the best approach is knowing how much you want to risk when you're going into a swing. So if you have a port with $200, are you prepared to use all $200, or is a limit to how much you want to use? If you want to use like 150 of that, then DCA it. DCA it on those positions and start building. I started to DCA build my position at 1906. I went in super heavy with that. I was like at 111, then I got up to like 114. I burned at 2015, which was like a little bit over 3K in the sense of a loss. Went back in 2045, went with a smaller position size, did like 94 ETH. Made some profit on that, but then cut it because I was like, this thing's probably going to go higher. And then I mentioned inside the group saying it wants 2127, 2130. So I set my position for 2127. I think when it comes to the swing, it's knowing where, or at least having a finger on the pulse in the sense of where the trend is going to be heading. I'm of the confidence that there's a pullback that's required. Nothing more, nothing less. Not trying to overcomplicate it. In order to have a healthy market, have a healthy bull run going into next year, there has to be some form of pullback over the next 45 to 60 days, maybe 90 days at most. But there has to be a healthy pullback. So as I'm building it in the 2100s. I'm going to build it inside of this order block over here in this area. Again, if I get underneath here in 2067 and look at my weekly, I just want to wait for my next weekly to open. Right? That's really messy. If I can get underneath here, I'll add. Let's say this retraces down to here and then I open and I can't get past this. Yeah, I'll add. Take it down to here. take profit there, let it run back up, add back again. Because remember, I'm at 21.27, so if I add at 20.67, then my average is not going to be that bad. I have wiggle room, if that makes any sense. Any of you guys have anything else? Any questions? Anything you want me to run back over? Yes, it is recorded. It's going to be inside the chat. Give it a couple hours to process because it's YouTube and it's 4K. It takes a little while, but overall should take maybe about an hour or so. It should be available. Let's 15 minute again. That looks good. It's filled in this imbalance here. It's probably going to try to do the same thing. I almost feel like this is going to offer up as liquidity. It's going to be bait. I think folks are going to try to enter into this again.
It's just going to bait them. $1K to $10K challenge. Excuse me. Are you waiting for some order to the market?
I'm not understanding what's the question. Like, am I doing the 1K to 10K challenge? I'm doing the 100 to 1K right now, and then at the end of the month, I will flip over to 1K to 10K. Like if the market makes sense, if that's your question. Yeah, I'm doing the 100 to 1K. I just moved and all that jazz, so the 1K to 10K that I did, I think I got it to like 5,200. I moved those funds. I withdrew those funds to help with the moving. But that's why I'm doing the 100 to 1K. So right now, using that as an example, like risk management perspective, I've been going in, building in with like $35, $65, and then ramping all the way up to like $95. 1906, I burned that one. It was like a 16% loss. On 2045 was an 18% loss. So I think I'm at a total loss of like $31, $32, a little bit like that. But on that challenge account, I'm up $72 right now. So I've made back my losses and then some. On the bigger account, I'll tell you right now. I actually had to close it because I think that's what eats up my bandwidth between streaming and TradingView and everything else. P&L is like at 29.31. So I still have some more recovery to do on that one, but like if I were to close out right now, um, I would at least recover my 1906 loss, or at least my 1906 burn. But I'm just being patient. I'm waiting for. Number one, I'm waiting for my confirmation, but more so, I'm waiting for this. Like here, I'll probably take about 30%, maybe even 40% off the table, just because it's the trend line that we broke out from. Um, but if we continue to slide down, wave B, honestly, I'll probably close there. Like if we went to wave B, I'll probably end up closing. Maybe leave like a small little runner, like I don't know, like $150 in there or something, $500, something small. But leave that as a runner just in case we decide to, keep dumping down harder. But from a breakout perspective, I think maybe a wick to here, right? Liquidity, breakout traders that are entering on this trend line, it's too easy if that makes sense. And then push out these high leverage positions here. So I would more likely enter here, lower leverage. Then once we break out over here again, then I'll start adding. Every dip that it has, I'll start adding and just keep building from there. Um, I mean, a mixture of both. I mean, I do this full time. So I'm doing the smaller account to help other traders out. People that want to make money, especially through the holidays. But more so individuals that want to learn and figure out how to make money on their own. And then the bigger account, because like I said, the holidays are here. So it's like dual focus. I wouldn't. I hear what you're saying. Like the smaller account, like are you putting much effort into that one? Or are you okay with just like killing it, or burning a position? It's the same for me, right? It's win or lose, if that makes any sense. Like, oh shit, this position is losing. Kill it. Like it could be $100, it could be $5, it could be $5,000. Like if it's a losing position, I'm just gonna get rid of it. My 1906 was profitable for like 4 days. I think we hit 1906 like 7 times until it was no longer profitable. So me holding on to that one made sense for me to hold on to that one. 2045 was more riskier take. It had a stopping point and then it slowed down, but then it just turned around and just boom shot out of there. So 1906, I felt good about that one. 2045, it's a little bit more risky to be honest with you. 2127, I feel like that's a solid play. I feel like it's a solid entry altogether. I just need next week to roll around so I can get more confirmation. Right now, if I'm looking at a ADX, like on a weekly ADX, excuse me, DMI on a weekly, I have obviously strong, very strong bullish momentum. But if you look at your ADX is still underneath your DM positive, which is um, volatility. That's really what it translates to, volatility. So all it's really going to take is for that DM positive to move its nose down, which means there's a loss of momentum. That's your pullback. That's your pullback. It's above the 25 line, your DMI, which is bullish, but there's no strength behind that. So again, it goes back to what I was saying earlier, that this entire move was just fueled by fundamentals. It wasn't fueled by TA. The TA is in my opinion, it's a longer game in that sense. So we need the ADX to rise above 25 line, but we also need the ADX to rise above the DM positive. And that's from a weekly perspective. On a 12 hour, DM positive is now has its nose pointed down, and ADX is running flat. It's ran flat on us twice now, and then it moved up. So it's being tricky dicky, if that makes any sense. Uh yeah, I mean, we touched on scalps um earlier, meaning like if you are going to scalp and you have the intention of scalping, then you're using a lower time frame. You're in that position for a couple hours at most. You're not sitting in it all day. The significant difference between swings and scalps is swings you're in it for days. You're in it for maybe even weeks. Your scalps are going to be shorter time frames, therefore you're using a lower time frame. You're building around that. When I start mentioning daily, 2 day, 10 day, weekly, maybe even 12 hour, I'm not discussing scalps. I'm purely talking about swings. If it's an intraday, that I've entered into that position on a 12-hour session, because that's when you're going to get the most momentum through 12-hour sessions. So 7 a.m. and 7 p.m. Eastern Standard Time. I'm looking for my entry points. Everything in between, I'm exiting as I'm getting closer towards that end of that day. Regardless if the position is going to continue to keep going, I'm going to get out of that position. I'm going to take my profit or break even, whatever it may be. Maybe it's not the best of positions, but then you're looking to just build it the next day. That's the simplest way that I can put it for you guys is intraday. I'm looking at, I'd say lowest time frame I would use on an intraday is maybe like a 2 hour. But ideally, I'm looking at 8 hour through 12 hour. And then I would use a daily, because it's obviously intraday, daily as my peak one. Like, hey, where's my trend starting from? Where is it beginning? All right, great. I have identified where it's coming from. Let me go to a lower time frame, like a 12 hour, and figure out where a good entry point would be based on the trend. And then you just enter from there. On your scalps, like I said, 5 minute, 15 minute, 30 minute, max 1 hour. Max 1 hour. And you just can't hold on to it. For your scalps, the indicators that are best used, at least that I like to use, are going to be RSI, because the RSI is going to indicate the candle strength. So if I'm in an overbought situation and I currently have a scalp long, and once I reach into that overbought situation, I'll exit. And that's a good opportunity to start looking for shorts. You're going to enter into a short. You may be in that thing for like 30 minutes, 40 minutes, maybe an hour. Once it hits either oversold or it taps on a 50 line and it can't break underneath a 50 line, I'll cut the short. Opposite is true in regards to longs. Let's say we get into an oversold situation. I cut my short. Now I enter it into a long, and I'm scalping that long, and I can't break the 50 line on an RSI. I'm cutting that long. That's my leading indicator, and I will utilize that on a 15-minute and on a 5-minute for RSI. DMIs I like for trend strength, so that's why a 4 hour, 12 hour. For me, I use a unique time frame like a 2 day to measure the DMI. That gives me the most confidence. Hopefully that answers you guys' questions. I do, like I said, I have this recorded, so I'll put this inside of the chat for us, so everybody has access to it. Thumb through it. It's going to be a little bit lengthy. We started at 12. It's 1:30. I'll try to see if I can put timestamps on it. That will take me a little bit of time, but what I'll do in the meantime is I'll at least post it. So if you guys want to watch it on your own from a raw perspective, you can. And then I'll go back through it and put timestamps on it, so that way if you guys want to fast forward, you know what areas to be looking for. Outside of that, I appreciate all of you guys that came in today. Thank you for all your questions. Keep them rolling inside of the chat. Let's not end the conversation just on this stream. Let's just keep it going. Lean on me so that way you guys can grow your strategy, grow your style altogether. Don't be afraid to ask me anything. There's literally no such thing as a dumb question, especially when it comes to trading. Everybody has a unique style and approach to how they handle things. In my opinion, there's no right or wrong way, obviously, unless you're in the red, but there's no right or wrong approach. It's just a matter of identifying what works for you. So that's what I'm here for. You guys let me know how I can help that. You were very welcome. I'll catch you guys real soon. Peace.